All right, here we are live on FX Street, and this is Trade with UFOs, Nailing FX, the US session with me, Andrew Hahn. How's everybody doing this week? It's been an interesting week, and today we have the US presidential debates, being Thursday, the 22nd of October. So it's going to be interesting to see. So in the meantime, with the opening of the US markets, in about 20 minutes, we'll see what sort of movers and shakers is going to happen. And so let's just dive into it. All right. Now, if you do have any questions, or you can send me an email at andrew@tradewithufos.com. And if you did want to join up for any membership at Trade with UFOs to get sort of the latest updates of what's going on, you can sign up at www.tradewithufos.com/Andrew, as you've been seeing kind of scrolling through here. Okay. Just a few disclaimers at the top here. Please just read that through as it's rolling through. Okay. Short and sweet, and just so that you know, the sessions are not just on FX Street. We also, on the off weeks or the off days that we're not on FX Street, we can be reached at youtube.com Trade with UFOs. It's our channel. I'm there usually on Thursdays now. So if you were following me on Tuesdays, I'm on Thursdays. So I kind of swapped out with Pedro there, and of course during the kind of the morning of the US, or the afternoon of, or I guess even sort of the morning of Europe, we have Oppa, and so he's out in Vietnam, and so that's why his times are a little bit more to his time zone there. And then of course we have Ronaldo on Fridays. All right. So moving on, there is a training session actually next week from the 26th to 30th that I'm doing. So it's going to be 5 days, 3 hours a day, and we will be giving actually 3 months of access to our auto UFOs and auto technology that identifies buy and sell orders, and auto climate is actually complimentary, so that you can keep forever. These are the times on the left here that kind of fit your particular time zone, so do take note of that. And so it's going to be next week. All right. So if you're interested in that, do sign up. So what's been going on? Really, just from a climate perspective, the Aussie is still being weak. So looks like there could be more showers ahead, especially as we have sort of a risk-off type of emerging scenario or climate kind of coming through. On the euro side, we've both the euro and the pound actually we've had some upward movement of that, inverse to the dollar weakness that we've seen over the last week. And but interestingly enough, we have had the loonie. It's been pretty strong, and also the yen has actually been pretty strong this week. So that's kind of a reflection more of the dark clouds around the Dixie, right? So if we do want to look at some of the events that could be affecting things really into this week, the remainder of this week is really only something on the euro side, but depending on how the debates go tonight, US time, there could be stuff that comes out of there that could affect currencies, or maybe not. But as we know, the tweets of the sitting president can have some effects, and so who knows what he will say during the debates, which could, impact. It could have some effect on the markets, or maybe not. But we'll just keep an eye out over the next couple of weeks. For any market moving news outside of the normal sort of economic data release that come out. But again, the US elections are probably going to overshadow some of the things that are going on. But hey, look, life still goes on, right? So it's not to say that that the US elections are going to be the ultimate decider of what moves the markets, but it's definitely something that people are paying attention to. So, last week we were, kind of at this area here, and it did look like we were putting a low here around 493, but it turns out that price didn't make it above this sort of congestion area here, some prior resistance, didn't clear that 94.75 obviously, and so we weren't seeing a continuation of of that uptrend that looked to be emerging, and instead we that kind of turned into a lower low. We had a turning point at this that became a lower high, and then now we've put in a new sort of lower low here at 92.50. Now, will we see a continuation down of that, potentially down to these prior lows here? From back in September, we'll see. But we have broken this uptrend line that we drew last week. And we just have to respect it, right? So the moves are still bearish on the dollar, so any sort of retracement back until these areas, probably back up to 93, could see some resistance there, right? And so we'll see what goes on. But the climate is clearly, auto climate is clearly telling us down. The climate is down, and so until that changes, we just have to respect the movement of price. In terms of positions and orders, actually, sorry, I didn't update this right side here, but last week we did put in a couple of opportunities that we're looking at more on the major side. I was just going through the majors, since it was kind of really the first time being back in on a Thursday. We're kind of revamping how we show stuff here, and so what we looked at was the Aussie New Zealand, Euro, and CAD. And on the Aussie New Zealand, we did trigger some trades in there. They're still open. The Euro short clearly got stopped out with dollar strength, dollar weakness and Euro strength. And we did get into dollar CAD, so that kind of hit all of the targets there as it moved lower. So that's kind of so what we're really watching at the moment is Aussie New Zealand. They're kind of almost the same trade as well. They kind of moved together, and so let's take a look at the actual market, what's been going on. So let me just move things here, and let's just do a quick check on FX Street here, just the calendar, what we're coming up to. There's more things that are going to affect, I guess, just more low impact sort of news coming out, but nothing really that's really going to stand out for the rest of today or really this week. Nothing too much, right? Although for the Europe side there is the PMI sort of numbers coming out, but I think in this sort of COVID type of situation, right, where that kind of seems to be a damper on the economies everywhere. Nobody's really expecting fantastic numbers. So that's there on the calendar. And so let's just take a look at the markets here. Okay. So let me just get into the Aussie here. So this is what we were looking at last week, right? So we were kind of looking for a move up into this area here. So that's where we had identified some unfilled orders and unfilled sell orders, and so price has only really just it hesitated to move to this area last week or earlier in this week, and it's only just now managed to get into that area. So that's why we we've kind of really need to kind of watch this one, watch our expectations to see if Aussie does move down lower, because it already done that early in the week, and it didn't make it up to this area until now. So are we going to see some selling pressure come in? We'll see, because that climate is or the previous go up to here, it was on the short side. It's kind of turning a little potentially bullish, but not yet. So we're just gonna have to keep an eye out for strength back into the Aussie, for it to blow through this whole area here. It's still quite it's still quite a bit of a risk type of scenario that would need to come back into play if we're going to see the Aussie move higher. But as long as you kind of fixed your dollar, your risk, right? So your position size and kind of adjust your position size to kind of fit your dollar risk, then hey, you just got to let it play out, so that's normally what I do is just say, hey, look, whatever the size of that area is, the number of pips, so in this case it's 50, is it 50 pips? Yeah, 50 pips. Then I change my position size accordingly to fit the dollars I have at risk. So even if I, for example, if you put your stop up here, right? If you said, hey, look, I'm totally risk averse. I really want price to really move that far, right? Then 72, say 72.40, right? 72.40. If you made that your where your stop is, then if you're risking $100, right, instead of putting a position size of say 20,000, you'd put say half of that, like 10,000 units, right, or whatever that number works out to be, and that way price has to move that far before it gets you stopped out, but you're only risking $100 anyway. Which is if that's what your normal dollar risk is, right? That is commensurate with your account size, obviously. Then it doesn't matter how far, in that sort of sense, your stop is away from your entry point. You kind of fix your risk there, right? But of course, if you're going to get your 1-to-1, then it has to move commensurate with the size of that stop, right? If that's going to be 100 pips, well, to get your 1-to-1 mathematically, then it's going to have to move 100 pips, right? So these are kind of maybe Jedi mind tricks that you have to play play against yourself sometimes to but important, right, when it comes to risk management, to to keep your dollar risk in my opinion fixed, so that you just match your account risk and just adjust your position size so that you're not tempted to risk more than you should, and of course that that depends on your strategy too, right? Does your strategy help you to clearly identify those entry and exit points? And that's kind of the beauty of the auto UFOs, is that it does do that for you, right? So so that maybe we'll go to, let me just go as an example here. So dollar yen here. Okay, so with the auto UFOs, what it's doing is identifying those areas where we expect there to be sell orders to come into play, right? And so you kind of click on, so if we're bearish, right? If we're bearish on Aussie yen, then we're looking for red UFOs, and so that's where the sell orders come in. And so here it's identifying this this area here where we expect the selling to come into play, right? Okay, this area right here, and let me just turn them off, right, just so I can adjust this line a bit better. And so it's showing us, right, all the auto UFOs, it showed us that prices would need to move all the way up here. Okay, I'm just going to round it out. Right, that's 75. Right, so it's showing us that, hey, look, this area here is where we expect a bunch of sell orders to be placed, right? And so what we would expect is for when prices move up into that area, just get my arrow, right? We would expect prices to come up here, and then it's going to rebound, right, down lower, because that's where all the sell orders, an overwhelming number of sell orders would come into play here, you see, is what we expect, and therefore push prices back down, right? And so that's how we would want to profit from that type of situation, is to place our orders, right, at the same area, right? And depending on whether we want that 2-to-1, for example, then we know that, all right, price needs to travel down to here. Okay, once it goes up here and then down here to get that 2-to-1 risk-reward ratio. And here it's clear what the number of pips is, right? So between 75 and 75.40, that's a 40 pip risk, right? And so you have a clear identification of where to put your stop. So, I mean, you can put your stop right there, or, if you want to give it a little bit of space, depending on what sort of spreads you have from your broker, you can add a little bit, right? And therefore, risk adjust, your position size accordingly. Right, so okay, so if we did want to get that 2-to-1, right, risk reward ratio, and so what that would mean then is, if you're risking, you got to enter at 75, okay, and let's say you just risk 50 pips, so you got, maybe give yourself an extra 10 pips, for example, right? But instead of messing around with working out, trying to work out what your what your risk is, right? Is you just your position size is based on the risk. You just put in your say $100, right? If that's what your account can support, and this tells you, right, what your position size is. Now you may not want to put 20,000 units and 933, right? You may not be able to plug that in, so you just round it down, say 20,000 units, and okay, yeah, you're risking 95.54 rather than $100, but it's about there, right? And then in terms of profit, because you got to do 2 to 1, it's easy enough. You put in your 100 pips, right? And so you're risking 95.54 in order to make 191 and 8 cents. Okay, and so once you risk adjusted that, then or position size adjusted that, then you just whack in your order, and then there you go. Right, you're done. And it's also kind of the neat thing, right, about audio FOs is that it's very efficient. It kind of does that heavy lifting for you, which is is what technology is there for, right? It's there to help you do that heavy lifting, and then you just wait, right? You just wait. You put your orders in. You just wait and move on, right? Look for some other opportunities. So you've already, let's say you've already got some Aussie exposure. If you may not want to have more Aussie exposure, let's say that let's say that you want a little bit more yen exposure, right? So you do the same sort of thing. Double check. Let's see what the climate is, because if the climate is down, which it is confirmed down, and it's kind of the start of this emergence of a potential down climate, right? Then we really want to look for shorting opportunities, and so again, maybe playing on the strength of the yen. So even though we've got Aussie yen up there, maybe we want to get a little bit more yen exposure, and maybe expect the CAD to weaken a little bit, as say, oil comes off, or because it's moved so far already, maybe it's time for CAD to take a bit of a breather, and so you get your weakness in the CAD and your continuing strength on the yen, and so maybe that's going to move CAD yen further, and so climate is down. The 4-hour, see if there are any areas here that we're interested in, that we can also initiate a sell. Nothing yet, or still trying to find it. Let me try to do that again. Okay, oh, it's all the way up there. So let's take a look at a lower time frame. There we go. Lots of them, lots of UFOs flying around. And so which one do we like? Again, it kind of depends on part of your strategy. So that's the other beautiful thing about this is, if let's say you like Fibonacci's, right? So if we identify these areas here, okay, that the app is helping us identify, right, as where the buy and sell orders can come in to play, right? Let me just turn that off. Okay, and yeah, let's say that you like these Fibonacci's. So let me see. Okay, just some of these standard fibs that are out there. Okay, and maybe let me put a 50% one in there as well. This one. Fib retracements, let me bring that line up. A little easier to see. 50% here. All right. So yeah, so let's say that that you kind of like the sweet spot of retracements. You kind of like this area, and so if price returns to this area, then you may like to that's when you would like to. So this maybe you may say, hey, look, it's a little bit close here. You really want to see price move up here and then rebound here, right? So the auto UFO is complementary in that sort of sense um, to your existing strategies, right? And maybe throw in a moving average, throw in whatever other sort of technical analysis you want to throw in there, and that could be the area that really want to focus on. This one may be a little bit too far away, not really aligned to any fibs that you like, but it could be right. It could be more in alignment to, say, for example, a sideways trend, right? So if you do a trend analysis, right, you see that, hey, look, we're in a sideways trend, and so you may like this one up here because you expect that, hey, price will probably blow through here on its way back up to the top here, where you expect it to bounce off, right? So that's maybe what you would expect, right? And if that's your analysis, it could also be that you decide, hey, look, maybe the expectation is that yes, price will come up here and rebound from here, but then hit up this way, right? In which sort of sense you may say, all right, my expectation for profit, right, I'm just going to take it here. I really just want to get a one-to-one, and because I kind of doing a range play, right? I still want to take advantage of what could be this could be if you're an Elliott wave type of person, right? Then hey, this could also figure into it too, right? You may say, hey, look, I just want to get a wave 2 pullback, right? Take advantage of that, right? With the expectation that it's going to go to a wave 3 and then do a little pullback, retest that previous resistance, become support before heading up to here, right? So you get one trade, two trades, or 3 or 4 trades. I mean, depending on what your strategy is and how you use all of your technical analysis, right? So that's what we've got here on the Canadian. I think if we're really looking at this, for a continuation of yen, right, to the downside, and maybe just with a little bit of a pullback, right, then yeah, this could be an opportunity worth taking a look at. And again, it's like, hey, look, maybe I just do the one-to-one right here, right? I'm risking, say, about 20 pips, right? But risk size at $200, right? So so what, right? You're just looking for a 20 pip move, right? And you're risking 100 to make 100, right? Or maybe you decide you just got to risk 50, right? Maybe risk 50, and because it's more of a range play for you, right? So you can plan this out however you wish, right? But I think definitely if we consider a one-to-one here, is probably worth taking a look at, right? And then if price does come back up to these areas here, yeah, definitely consider take into consideration this area here, right? So So I mean, yes, the UFOs kind of identify this, if I can use the word sweet spot, right? But that doesn't mean that you don't need to necessarily just focus or keep those parameters. I mean, you adjust it to be however you want it to, right? Based on your existing, knowledge, your existing way of doing things, right? And so again, the technology is there to help bring efficiency to what we do as traders, right? And to kind of help with some of that decision making, so the activity, which is why TradingView is a fantastic tool, right? Fantastic charting because it just gives so much uh, you know tools that just help you do your stuff, right? You don't have to kind of it's so easy to learn, right? And that's what we try to do with our technology, is make it easy to use, make it easy to read, and just so you can kind of get on with what your job is, right? Which is to make a decision. Is this setup the type of setup that you want to trade? Is your analysis, is your technical indicators, what is it telling you to do, right? And so how are you going to trade, right, this particular market, based on that analysis, right? Um, and so so you want to be able to, that's why, like even if you use TradingView to trade through, right? I mean, the ability to just create an order out of this, right? Just right from there, it's fantastic, right? So, so let's say 79, 79, put a stop, let's do it at 20, right? 20 to make 20. I mean, this is so, you can do this so quickly now, and 100, right? $100, round it down, so 50, I'll just do a 0.5 there, right? So if you're in the MT4 world, right, 50,000 units is, 0.5, and then you're done, right? You just press the button, and if you want to do like a little picture of all that sort of stuff, there's that little camera here. I don't know if anybody's used a little camera, and you just take a little photo. Right? You can either use just copy the link if you want to share it around, or you just do this, right? It's got everything there, and you just do a little copy that image, right? And then if you've got a little trade log, right? Let's see here. Oops. Where am I? Okay, so that's just, for example, this CAD JPY, and you just do a right click, insert link, and well, we just get it back from this one. Go back here, and just that in here, insert link, right? And so then when you click on that, it brings up your picture, right? It's pretty cool. So today is 10:22, and a short. What was that? 7990, right? Shrink that a little because got a little menu at the top there. 7990, and then 80.1, and what was that target? 70. It's 20 pips, right? So 970. Okay, something like that. Okay, so this is just showing you an example there, pending. I'll have to update this sort of stuff later. But that's just to show you how that sort of linking sort of works. So it's pretty nifty if you didn't if you weren't of that before. All right. So what else is potentially out there? So we've got some yen exposure, right? And price is going to have to move. Yen will have to weaken a little bit, right, in order to get up there. Euro has been, that's where we got stopped out before, so I'm going to remove that. So euro has been strong. And let's just check the climate here on the daily. All right, so it's been up, so we want to look for buying opportunities, but it has moved a little bit as well, right? So that's not to say it can't move higher, but let's see if we get a bit of a pause. If we can get a little bit of a move lower, then it'd be kind of nice. I'm going to remove this now. All right. Just check on the hourly. Oh, looks like we may have missed a little buying opportunity here. That was probably on a lower time frame, but here we have a buying opportunity here, and let's see on the Fibos, what are we getting? It's kind of like a 50% retracement there. This one here is kind of interesting. Where we had a little bit of a rebound. That was a 38% retracement there. So 50 could be an all right place to place an order, right? With the expectation that price is going to move higher. So if we kind of take this area here, let's make it a little darker. And, let me make it a solid line so it's a little clearer. And maybe thicker. A little thicker. Right. So price is rebounding there. What's the bigger picture here? It's kind of a steep incline. There's also this area here, so that can allow for price, right, to come down on its way down, right, to the bottom of the channel, right, before heading up here. Clone that. There we go. Okay. So this could, kind of broke that prior high. It's kind of the new high here that it needs to break in order to get back up here. But this is also entirely a potential, play of how euro could play out, right? So let's just take that and zoom in a little bit here. Save this. Save. All right. Try that again. Yep, so if we're going to see, so come into this area here, there's some sell orders. Let me just take a look here and here. Okay, let's turn that off. All right, so price is going to have to get through these areas in order to do a continuation of a move higher. Okay, let's just go back to the hourly. Okay, which makes sense, right? If we're going to see higher prices, you're going to have to clear these prior highs, right? These two here, 1, 2. Otherwise, just got to put it low, and then, you know, it could zigzag down, right? Down to this area before heading back higher, you know, or just, you know, go down to the bottom of this channel, right? Is also another sort of scenario that's out there. Okay. No. So we'll just wait for euro to get up to here. So we play this downward move, expecting it to continue down lower. Then let's do this. So it's like a 20, again, about a 20, okay, 22 pip risk. It's going to take it all the way down to here. Should give us just above 2, risk of 2. Right, so let us put a order there at 45, say, and do the 20 risk. I think it was 22, so I'm going to do 25. And to get down to here is, let's just do 50. Okay, so to this 2, and then we have $100. Okay, so since that is, okay, 25 pips there, all right. Okay. Right, and so we can just take advantage of that little retracement, right? Because that's really what that is looking to be. You know, if that's going to be anything, it's you know, well, if it is going to head down to the channel, right? That would be still considered a retracement, right? To the bottom of the channel, this up channel before moving higher, right? And so, yeah, so the short there, get down to here, and then, you know, if the move, right, is not a strong one, then we could get a pull back, and then, who knows, see what other news can push it down to the bottom of the channel. Otherwise, you know, it could be just one of those zigzag moves up, you know, to kind of hug the upper end of the channel, right? Just to keep on moving higher and higher and higher without pulling back, right? So let's see. So we want some euro exposure there. Let's kind of continue out, you know, depending on how you see the Swiss and the Aussie. So if the Aussie, if you feel it's going to continue to move lower, let's get on a higher time frame here for a bit. Change that. All right, so if we're looking at continue move lower here, and let's make this solid. We're gonna see continuation of that lower. Then with the expectation of, say, prices moving up here and kind of zigzagging down, right? Then what can help us is probably this set of UFOs up here. Right? yes, there is this area here that price could move into and still, hit that and then move lower, right? Still an opportunity. So this is kind of definitely a play on a continuing, maybe a little bit of pullback on the Swissy, bit of weakness coming in, and then a move, maybe, and then a move lower, back lower. Right, so this could be something that you're looking at. But because you've got this overlay, right, of unfilled orders over another, right, let's take that off. What we'd commonly do is just take that whole area. Okay, let's just take this whole area here. Right, so this is a 50 pips, and if we take it all the way to the bottom here, about 2.5 to 1. Right, so that's, or if we just want to take it to this low here, right, the prior low, maybe just above that, we can still get a 2 to 1 out of that. That's dollar Swiss, Aussie Swiss. So let's call that 80, and still do 50 pips there, make that 100, and 100 risk. Round it down, 2, 3. Oops, sorry about that. Oops. See Swiss. Interrupted there. Pressing the wrong buttons. 80, 50, and 100. 100. Round that down. 2, 3. Okay, and just whack that in. All right. Okay, so a number of opportunities there, different exposure. So we had the Aussie yen, Aussie Swiss. Actually, let me flag it. Otherwise, I forget. The CAD yen. There, and the euro. Okay, because we're already in Aussie, New Zealand, and we're looking at these ones. Clean some of these up, and yep. So these 3 here is what we're looking at. All right. So we'll update that. So just to kind of round things up, then we do have this class next week. Please sign up quickly. We are probably closing out registrations fairly soon. So if you do want to take advantage of this opportunity to learn a little bit more about the auto UFOs and auto climate, how we apply them to to your own methodology, or if you're a beginner, to develop a methodology or structural routine for how to use our technology, please come and join us next week. And in improve your efficiency in how you do stuff. Okay. All right. Well, I'm gonna end off here. So take care, and we'll see you next time.